Hey guys, it's John here. Today, I would like to talk about A2 Milk for the month ending 31st of December 2021. The first thing I'm going to show you is my portfolio. Oh, I just don't want to look at it. A2 Milk, my goodness. So let's get straight to the video. It is painful to see. As you can see, it dropped 41% and 40%. My average price was about under $13, was about $12.60. So it's so painful to watch. I put in about $7,800. It is only worth $3,500. So it is very painful to watch. So I want to show you this because I would like you to know that I'm holding A2 Milk, but I will be as objective as I can be, because I don't want you to think, oh, John making videos because he wants to pump up his A2 Milk stocks. Well, let's get straight to the analysis. We're gonna talk numbers here, we're gonna talk data. So hopefully you can make your own decision. All right, let's get straight to it. Let's talk about the result. The revenue down 2.5%, which I think it's pretty good given the situation of the Daigou. I think it's a great result, but the EBITDA dropped 45%. The net profit after tax dropped 53%. The earnings per share dropped 50%, but they still have got net cash, operating cash flow, and this is the product segment. The infant nutrition dropped, the liquid milk up a little bit, the Chinese market dropped, the Australian, New Zealand dropped, the USA drop as well. All of this been sort of dropping, but the A2 Milk reaction when the result was out, they were up. The share price up 11%. So yesterday they went up 11%, today they dropped another 3%. So the market see this as positive, and I personally think this is also positive, because even though the net profit has dropped for 53%, but A2 Milk has been spending a lot of money in branding. Okay, let's go to the details. Okay, here they said that, okay, there's a lower birth rate in China, which is not great, but the market declined 3.3%. But you need to know that China is very big, and the decline in birth rate, it's in overall. But if we go into more details in this, I will show you the graphs on this, right? So there's a decline in newborns, not great for investors, obviously. But there are two markets here. One is called the Key A City market outlook subdued. So this market is not great. So this is like bigger city, where the bigger city have got more expensive. They prioritize career. They don't want to have too many kids because it's too expensive to raise kids. But they have got like a BCD city market, which is like a second tier, which is a smaller city where it is more affordable to have kids. And this is the market that doesn't really drop as much. And this is where A2 Milk is going to focus in this BCD city market. Okay, so Key A cities have higher cost of living. As you can see here, Key A cities is more college educated. They're more likely to prioritize career and professional development. In contrast, lower tier cities have greater affordability, and they have got higher birth rate. So even though 3.3% in general decline in birth rate, but it does not mean that A2 Milk is not going to make more sales in China. So just so that's something that you need to be aware of, even though it says drop 3.3%. All right, the revenue has gone down, but they were in line with guidance, which is great. I like what I'm seeing here, in line with guidance. So the EBITDA down, the EBITDA to sales margin down, the MVM acquisition is completed, but the MVM has got sales of about $36 million. They have got an EBITDA loss of $10 million so far, and they projected that they're going to have a loss of about $20 million. Not great, but they're expected to have got an $80 million sales before with MVM, but they have revised that guidance to $100 million. And MVM, they projected to be profitable in 2026. So it's still a while to go. So that's just something for you to aware with this MVM. All right, this is a good thing. The brand health metrics improved following significant marketing campaign. Brand investment increased by 37%. It looks like the company is sacrificing a short-term result. They're spending a lot of money on marketing and branding, but they wanted to get market share in the long term. So the company could have chosen to keep their EBITDA margin, but instead they would like to get market share, so they're spending more money. And it's sort of like a short-term hit in our bottom line, but if they can continue to execute the strategy long-term, then it's gonna be great. Now let's move on to their income statement. Okay, so we're just gonna do a quick one here. We have sort of discussed about it, and the marketing cost here is increased there. The admin expenses increased, the distribution expenses increased. So the gross margin here actually decreased from 50% to 46% because of the supply chain issues, higher cost of goods sold, higher raw material. Also, A2 Milk said that they already increased their milk price, which is great. In inflation, because it's milk, people need to obviously drink milk, they were able to increase their price. So the increase of the price were able to be offset with the cost of goods sold. All right, so their income after taxes drop, obviously, which we have discussed, but they have chosen to do it. So that's the income statement. Let's move on to the balance sheet. All right, they have got $747 million of cash. They've got quite a bit of inventory here, but I like what I'm seeing here because they were able to control inventory. As you know, the milk powder, they can expire. It's great what they've done here. It's only increased a little bit, which is not much. So I actually happy with the way they manage the inventory. As you can see, the total current assets is still $1 billion. And if we look at the current liability, it's 387. And the current ratio looks great. We've got 1 billion and 387 million. That's like 2.5 times. So which is good. Still healthy at this stage. It doesn't seem that A2 Milk need to raise capital. If we look at the cash flow, the good thing is they have got a positive $98 million of cash flow, which is great, which I believe they don't need to raise capital anytime soon. Investing activity here, you can see there's $213 million that they purchased for MVM. Yeah, so they still got $747 million. Overall, it's pretty healthy. Next one, I want to show you the PE chart band in the last 5 years for A2 Milk before we get into the valuation. What I did was I put in all the EPS and I put in the standard deviation. This is something new, guys, that I've started doing. It's just gonna give me a forward PE, how much is the company is doing in terms of their last 5 years between the share price and the forward PE. Okay, so the average forward PE in the past 5 years has always been 45. This line here is a forward PE of 7.51. Anything close to here, it means that it's cheaper. But anything is in this green line and above, it means the share price is expensive. A2 Milk, unfortunately, is not as cheap as in the past 5 years. I was expecting A2 Milk to be lower down here, like in this PE here, near 7.51, but they are sitting at 40. Okay, as you can see that's 40. So yeah, the forward P is about 40, which is still not cheap. It's still not cheap, guys. Anyway, let's go to the valuation. Okay, so with this valuation, I'm going to use a future EPS. I'm not going to use a DCF. I'm not going to use the discounted cash flow because discounted cash flow needs a consistency across the board. And given condition of the market, I think it's better to use EPS because Peter Lynch said that what drives the share price is always earnings, earnings, earnings. All right, EPS, EPS, EPS. So in the last 6 years, the CAGR of EPS has increased for 18% per year. Okay, so it's A2 Milk has been growing fast. And I've been putting in all this analyst estimate. 13 cents EPS makes sense, right? It's okay. It's not up there, it's not down there. I think it's in line with the company guidance. The average CAGR for the next 3 years of 26% every year, given the condition, honestly, this analyst, I think it's pretty optimistic. Okay, but let's just work with what we have. All right, the P multiples, I put a discount rate of 10%, the P multiples of 35. When I use the P multiples of 35, it may sound high, but then as you can see, the 4P has always been 45 in the past. It's just gonna give me margin of safety 2%. If we look at the average annual P ratio, 29, when was this? 2016, 20, 33, 31, 31. The average P has always been 20, 33, 31, 31. So the average is about like 30. And if we use the P multiples of 30, it's not gonna give us a margin of safety at all. If we are optimistic, we put 45, then we see a margin of safety of 24%. I am expecting the future 3-year share price to be about $10, but if it's 30, then it's between $6.66 and $10. I'll probably have to wait another 3 years for my shares from $13 to $10. All right, so I'm just gonna keep on holding to it because, yeah, it's not great. So it's not good news, guys. It doesn't really give us a margin of safety. If you're looking for the 20%, 30% margin of safety according to this analyst estimate, and even then that's optimistic. It is very painful when I look at my own valuation because I would like this to be better, but hey, I don't want to make a video for the sake of pumping up my A2 milk. So let's move on to the technical analysis. As you can see, these are 200 days moving average here. Back in October, as you can see, it sort of tested the 200 days moving average, but it dropped. There was not enough volume, there was not enough buys to push it up, and it dropped back down again to around the $5 mark. But there's a strong support here around the $5. So, and then as you can see, now it's trying to break the 200 days moving average yesterday after this news. So in the short term, guys, according to the technical analysis, I'm expecting the support to stay intact for $5. All right. Hopefully they stay. But if for whatever reason, if the stock market crash, for example, I'm expecting the next support to be around here, to be around $3.50. So if it drops, then it would drop to about $4 and then $3.57 and then $2.30. Right. For those of you who does not have A2 milk, if you think it's gonna drop, then I personally would have waited for that to break that support and then buy below it. If you can buy about $2 or $3, it would be great. All right, that's if you want to get that extra margin of safety. And the target price, according to the future EPS, was about $10 around here, between $6.66 and $10. So it's a big range, but you can see there's a support here. Make that bigger. Okay, so if they can break around the $7.41, then I think A2 milk may recover. All right, I think it's gonna be a slow recovery. And if we look at the Fibonacci retracement, you can see the target price would be about $8.54. That's sort of the price. But I am hoping A2 milk can hold this support line around the $5 mark. And if they can do that, and the results speak for itself, the earnings per share increases, they start making money, they start increasing their sales with whatever situation it is, I think it's going to be great. Guys, please give it a ding in this video, or a like button. Please ding that like button. If you like this video, if this is helpful to you in any way, I would appreciate you to also subscribe to the channel. So thank you so much for listening to me until the end. Until next time, I will see you guys in the next video.